Hey everyone, my name is Mike.
And I'm Jose.
Today we're going to talk about taxes. Great, wonderful.
Yeah, and by the way, just to start off, guys,
we're not tax planners, we're not tax accountants, we're not CPAs. We're no professionals by any means when it comes to this type of industry.
So we're not here to give you any financial suggestions or advice. We just want to let you know things that we currently employ as independent contractors to reduce our tax burden.
It's just personal experiences.
Correct.
And hopefully our accountants told us the right thing so we're not breaking any laws here.
Yeah.
So I want to start with, people get into real estate and they come from a job, and in a job you actually get the taxes taken out on your paycheck, and also on top of that there's a hidden tax that the employee or employer pays that you won't even know about. You come over as an independent contractor, you have a really good first year, you make $150,000 and you spend $160,000, and then all of a sudden you get a tax bill. And this is a big problem we see every once in a while with the people that do really, really well first.
It's a big mistake that a lot of people make. So if you're used to being in an environment where you're a W-2 employee, the employer takes taxes out of your paycheck every week or bi-weekly, and the employer themselves, they pay an employer or employment tax. So all that's wrapped up for you. But now that you're an independent contractor, you're now responsible for every penny that you earn, and what tax bracket you're in and what you have to pay to the
Government.
That's each individual basis scenario.
Yes.
But what we're going to talk about is how to properly run your business like a business, and how to save as much money and put as much money back into your pocket or back into your business or back into your family, where you don't have to give away hard-earned income to the United States
Government.
if you just apply the tax code as it was written for your benefit.
Yep. So, I mean, if you just started out, you don't need to do some of these things right away. But once you get over $1 million in sales under your belt, you're probably going to want to do the first thing, which is what we're going to talk about, which is incorporate.
Yeah.
Talk to your accountant about it to see what type of incorporation, was an S Corp or an LLC.
Most agents don't want to do it because it's confusing. They don't know how to do it and go through the process. Here in Florida, we're fortunate because sunbiz.org is the website you go to. They make it very easy and seamless. It's about $130 and you can incorporate yourself. Mm-hmm. Or if you have an accountant or a CPA that helps you with your taxes, which I recommend you do get once you become an independent contractor, you want to have a CPA, a tax preparer, or an accountant that's specifically there to help you in your business.
Yep. So my accountant I think my accountant set mine up for a couple $100.
Yeah, they'll do it for you. They'll say, hey, listen, I'll go ahead and set it up for you, no problem. So not only do they set up your entity, but they also create a EIN number. It's a number that the government will give you, and it's basically like a social security number for your business. So they could track your business and all the income that your business makes for reporting purposes. But it's pretty simple to set up, and people often ask, well, how should I incorporate? And there's different ways to do it.
Talk to your accountants to be the best answer on that. It depends on how much you're making, what sort of business you have, but do you have employees that are working for you? So there's a ton of different things. Your accountant's going to be the one that's educated. Just like we're educated on selling real estate, your accountant's the one that's educated on there. Spend the money on that. It's worth spending money on it. I spend probably $4,000 a year on accountants. Well worth it. It saves me more than $4,000 in
absolutely.
taxes.
And so most agents, most realtors in our profession, they usually set up an entity as an LLC, and they file as an S corporation. How you file, and talk to your accountant, but how you file will be determined on what write-offs or incentives you can take, or how you're taxed by the U.S. government. So always check, but a lot of times it's easiest to incorporate as a limited liability corporation. That way you're separating your personal self from your business.
Big point here.
Incorporate in your name if you're in Florida.
Because in Florida, you can only get paid commission in your name. They do allow LLCs as MikeMelloRealtor, and therefore then the brokerage can pay me commission. If you do it the Mello Group, for example, then the brokerage cannot pay the agent the commission.
Because that's a fictitious name. So here in the state of Florida, a broker can only pay a licensee.
Yep.
And of course, when you get licensed in your individual name. But there is one exception. The state of Florida will allow you to do a rename, and it's usually like a $25 or $30 fee to get your license reissued as a new name. And you can only reissue it as, instead of just Josefleming, it would be Josefleming LLC. So now the real estate broker can pay Josefleming LLC, the entity, and then the entity will then pay you, the individual, a salary or some type of payroll.
Yeah, so that's one of the big mistakes some people make is that they get it, they just create a name instead of actually using their name. So the second thing you do once you have that EIN number is you open up your own business checking account and savings account.
You just go to a
Least
bank
checking, yeah.
and say,
I want to open a business checking account.
and they say,
Okay, can you prove to us you have a business?
and you say,
Yes, here are my articles of incorporation for my LLC or PA or whatever you set up.
and then you say,
Here's also my EIN number that was provided to me from the United States.
Government.
and then they'll open a bank account for that business, and now all the income that you make in residential real estate or residential real estate sales will be paid directly to that corporation.
And then all your expenses for the business you can take out.
So you have to remember, all the money that you make in real estate sales, it's not your money. It's not you as an individual's money. It belongs to your business. And your business receives the money, and then the business chooses how much of that it will pay to you as an individual. So usually if I make a $10,000 commission, it gets paid to Josefleming LLC, and then Josefleming LLC will choose to pay Josefleming, the individual, $3,000 for my work. That means that the business has the rest of the remainder of the funds in the business account. Now, what does the business do with that money? Well, for one, it's going to be stored there for business expenses, anything I need to run my business, and the rest of the funds that'll be there are also used to pay corporate taxes when I file my tax return.
Yep.
So we don't want to take all that money that we just earned, put it into our piggy bank, and then spend it as an individual. That's how you get really screwed.
Anyone that thinks that you can make $500,000 a year selling real estate and not pay anything in taxes, that's not how it works. People that don't pay anything in taxes are because they're not making money.
So if you're watching this right now and you say,
Well, how do I keep as much as possible?
now that's when you hire somebody that's an actual tax planner. And their only job is to look at the money that you make and figure out all the ways that you can use the tax code to prevent paying as much tax as possible. But you still will pay into the system. That's just how it works.
Yeah.
Let's talk about one of these tax loopholes, okay? So as a real estate agent, the number one thing that you do often is you're in your car all the time showing properties on a regular basis. We put tons of mileage on our vehicles because that's what we do. And the incentive is you get a tax deduction for every mile you drive in your vehicle.
Yep.
I believe it's 62 cents a mile currently, if I'm not mistaken. So at the end of the year when you do your taxes, your accountant should say,
How much did you use your vehicle?
and you say,
Well, I've recorded my mileage and I have a good amount. 'Cause once I leave my house and go to my office, and then from my office,
is when you start to gauge all your mileage. So you say,
hey, listen, I drove 30,000 miles this year showing properties and doing work-related things.
so take 30,000 times 62 cents, and then that's the deduction that you get off of your income. So if you buy a vehicle that's over 6,000 pounds,
If you get an SUV that's qualified SUV over 6,000 pounds, you're able to deduct the whole amount off your taxes, whether you finance that vehicle or not. So you can go buy an $80,000 car, and if you made $500,000 that year, now you're gonna get taxed on $420,000 instead of $80,000, and that's a 37% tax rate. So you're saving 37% off of that $80,000. So it's a pretty significant saving.
because you depreciated the value of the vehicle, you can't write off your mileage. So you just have to talk to your accountant and determine, hey, I do need a new vehicle anyway. Is this a good time for me to make the depreciation? And they might say,
If you plan to make more money next year, maybe we could do it next year.
and so on and so forth. So talk to your
Yep.
accountant, but the purchase of a vehicle or writing off the mileage, or if you don't write off your mileage, you can write off any repairs or maintenance to your vehicle throughout the year. Now, not only do most realtors have offices that they can go and work from, but nowadays a lot of these real estate brokerages are becoming cloud-based brokerages where they don't have a physical brick and mortar location that agents could come and work from. Now, in my personal opinion, if I'm a realtor, I kind of want a place to hang my hat, a place I can go to and be around other agents that are dealing with the same things that I'm dealing with, and I could kind of be tethered to an office or a broker or have access to other people. But a lot of that leads to my next one, home office. A lot of realtors, if they're not working from a real estate office, they work from home. So if you have an extra room in your house that you use solely as your office for work, you can actually write off the cost of that room compared to your mortgage and utilities.
Yep.
So if I have a room that I'm using that's 12 feet by 12 feet, then I'm going to write off that square footage and I'm going to prorate it by the amount of mortgage or rent that I pay, as well as all my utilities as well. So then when I do my taxes, I could say, hey, my tax accountant,
I have the room in my house. This is how many square feet it is. This is my mortgage or rent I pay each month. I divide it by the square footage.
and this is how much of a deduction I could put.
This is only for those of you with kids that can work. I have my daughter, I had 3 daughters, but one of my daughters works for me, and she does video editing. She travels with me when we film, and you can pay them, I think up to $12,000, it's either $9,000 or $12,000 a year tax-free. So where they don't have to pay taxes. So it's great. And then, she's able to use it for her college or whatever she might need to do.
And remember, guys, I want you to legitimize it. So make sure that when you start paying somebody that works for you and you have a corporation or entity set up, go ahead and add them to your payroll. Or if you do pay them, put them into a separate bank account where those payments will go into their separate bank or savings or checking account. That way, if you ever get it audited in the future, you can actually show all the money going into their account.
Yep.
And it's not like you saying, well, I was just holding it for them. So.
2 of the other things would be investment options, which would be Roth IRAs and SEP IRAs. And these ones here I'll probably leave to an accountant to talk about.
And then so the money that you put into your individual retirement account is money you're putting away for your future. So when you're 66, you can retire, and then this money compounds over time. So, I might put in $6,000 this year, $6,000 next year, $6,000 year after, but by the time I'm 66, it should be a lot of money that I get paid out. Now, one of 2 ways you could do it. You could do it taxed. You could tax your money and then put it in, or you could put it in and then tax when you pull out. So talk to your accountant about the different ways that you'll do it. And last but not least, the last one I want to go over is because we're realtors and then we're in the real estate business, we always get access to good deals first. So a lot of times we might meet somebody who says, I want to sell my unit. This is a townhouse I bought. I need to get rid of it. I want to sell it. And then you might say,
Well, actually, matter of fact, this is a nice townhouse in a good location. I don't mind buying it off of you because I made too much money this year. And I know that if I buy real estate as an investment, I can actually depreciate the real estate investment against my income.
so if I buy something, I could say,
Wow, now that I bought this investment property, I can now depreciate against my income and pay less taxes.
and it's a cash flow property too. So not only is that going to happen, but it's also going to earn me cash every month and put money into my mailbox. And if I ever need to borrow money in the future, instead of borrowing or getting a loan that I have to pay interest on, I can actually borrow against my investment or my real property, and all that money that I borrow, I don't have to pay taxes on. All we want you to know is 1, be smart with your money. 2, treat your business like a business.
That's a big one.
And 3, do not commingle.
Yeah.
Your business money is your business money, and your money is your money.
Of course, we're preferred real estate brokers here in Central Florida. And if you are trying to get your real estate license or have your real estate license here in Central Florida, make sure you contact us. I think we have Broker of the Year right here. So we'd love to talk to you about that.
So guys, get out there, go incorporate, get a good accountant, and take it from there.
All right, that's it. Thanks you all for watching.
All right, make sure you subscribe, and we'll see you next time.
Take care. Bye-bye.